Hi everyone, welcome back to the audit and attestation class. This class will be covering a new topic which is reporting on attestation engagement, and this one is part 1. Please go through the part 2 which is coming just after this. In this part 1 we'll be covering general standard for attestation report, and we'll also cover agreed upon procedure report on the same, and we'll do some practice question. So let's dive into to understand more in detail.
Last week we have started with chapter 5 and we have covered couple of things, which is like forming conclusion and reporting requirements for the audit section of your exam. So in last weekend we have covered 5.1 completely. I think today we need to start with 5.2. So in 5.1 we have covered like forming an opinion including modification. So what all type of opinions should be there. So we have discussed in that for issuer as well as for the non-issuer. Then we discuss more in detail about the content of the audit report for the issuer as well as for the non-issuer, for integrated report or for non-integrated report, for individuals financial statement report, as well as different audit report on like financial statement and internal controls, and how we need to give the cross reference to those respective reports if we are issuing two reports. We have discussed all these things in detail, and today we'll be starting with the reports on attestation engagement, and we'll try to cover this general standard for attestation reports, agreed upon procedure reports, and reporting on control at service organization today. And tomorrow we'll be covering accounting and review services engagement, which include like preparation engagement, compilation report, and review report, and the reporting on compliance. So 5.3 and 5.4 we'll try to cover in tomorrow class, and in last class we'll be covering all other reporting consideration. So that maybe like next Saturday probably we'll be finishing off, right? Let's dive into the notes. So sorry I missed to send you the notes in advance, but after the class I'll send you in the group so you can download and save at your place. So any doubt from the previous section which we have studied before we start the new topic? Guys, any doubt or anything need clarification? So if I quickly walk you through what we have studied in last weekend is like audit opinions, different type of opinions, evaluation of the evidence, audit documentation, and then we discuss about whether the financial statement are free from material misstatement or not. And after that, we jumped into this reporting structure for different type of report, where it's a standard report, modified on account of GAAP, modified on account of gas, adverse opinion, disclaimer of opinion. This is all for the non-issuer financial statement, right? After that, we jumped into, I think, for the issuer reports. So for the financial statement only or for the integrated report, what additional things you are required to add in integrated report, right? Then we discuss about reports on internal control over financial statement, for especially for the private companies or for the non-issuer, what all contents you need to keep in mind for the ICFR audit, and then what all representation you are required to do and which standard you need to follow, and what is the change from the earlier attestation standard to now auditing standard when we are doing this audit of internal controls as well. Then we did certain practical questions, right? So far, any doubt in the previous section what you have studied in chapter 5, or are we ready to jump into 5.2 report on attestation engagement? Yes, no?
Yes, sir. So far, so good.
So far, so good. That's awesome. Okay, so report on attestation engagement. What are the attestation engagement? SSAEs. So always, whenever it comes into your notice that it's an attestation engagement, what all things you need to keep in mind is the SSAE need to be applied. And what are the three category of attestation? Examination, review, and
Agreed upon
Agreed upon procedure. So here, when you do attestation engagement, here you do not generally conduct the complete audit of financial statement. When you do attestation engagement, it is majorly for any financial statement line item, or maybe any financial statement assertion, or maybe any financial statement report of the financial statement. Maybe let's say you are doing only the attestation engagement for the research and development expenditure for any specific requirement to submit with the authority who is giving you let's say grant or awards or any financial assistance to perform those research and development activities, right? Same way, like it may be possible, like sometimes you need to just do an examination of income statement. So there you are not doing like audit of complete financial statement, but rather you are just focusing on examination of income statement, right? So that could be possible. So it can be any statement, it can be any financial statement line item, or it can be any financial statement assertion. For example, they may ask you to perform the inventory count to test the existence of inventory, right? Or it may be possible they ask you to take the confirmation from the bank for the bank balances to ensure the existence and completeness assertion, right? So those things could also be possible and could covered in the report on attestation engagement. Whereas review engagement is the review of the overall financial statement, and auditing standard, which is GAS, is for the entire financial statement, right? So review and attestation engagement covered examination, review, and agreed upon procedure. So in case of examination, you can say in terms of examination engagement, you will be performing similar to an audit procedure, but for a particular financial statement line item or for a particular assertion, right? For example, you have a group company in US and you have that company have a subsidiary, let's say in India, but in Indian entity, let's say, is not very much material to the overall financial statement. So the group audit team has agreed to ensure the agreed upon procedure for the respective financial statement line item assertion, financial statement assertion. And they advise the component audit team, let's say, to the Indian CPA firm to perform the inventory count, to perform the observation of the inventory when management is doing inventory count and submit their report. So in that, they will be specifically mentioned that what all procedure you need to perform, as this is an agreed upon procedure engagement. So there they will be saying, on this date, there is an inventory count that management is performing. We request you to observe the inventory count performed by the management on that date from this time to this time. Second, they will ask you to test 30 samples from floor to sheet and 30 samples from sheet to floor in each category of the inventory. And each category of inventory include like raw material, WIP, finished good, store and spares, right? In addition to that, they will ask you to take the confirmation of inventory lying with the third party or maybe with the job worker, right? So these are the 4 procedures they ask you, and it will be clearly mentioned in their engagement. So that comes as an agreed upon procedure between the group audit team and the component audit team. Make sense?
Yes,
Have
yes.
any of you seen such kind of arrangement or such kind of engagement? Any experience you guys have? Yes, no?
So
Or
AUPs we have done when we were doing, let's say, component audits, like so agreed upon procedure is something we have seen, like at least
agreed upon procedure is something
that I've seen. I mean,
yeah, so I'm talking about agreed upon procedure only. Like group audit team has agreed, group audit team has agreed with the component team to perform the specific procedure that is called agreed upon procedure, like we were discussing about inventory.
Right.
So you have seen, right? So
Yes,
do you
sir.
mind sharing like what kind of arrangement you have seen and what procedure you have performed? Like what's your practical experience in doing that?
So I was part of the component team. So they kind like the primary team kind of shared inter-office instructions wherein they gave us instructions as to just audit, let's say, fixed asset balance, and we need to perform fixed asset procedures to make sure that fixed asset existence, occurrence, and all of those like valuation and everything is covered. And then we are just performing on that and reporting back to them whether that activity is completed and were there any findings or not. But that was the only focus. So we are not focusing on other aspects of the financial statement, but specifically focusing on the specific financial statement.
Yeah. Thanks, Coach, for sharing your experience. So in this like experience which Coach has shared, like group team has identified as a fixed assets as material balance for the overall financial statement, and they requested the component team to test the fixed assets, right? Complete financial statement line item. In that, they might have performed all the procedure required to test the fixed assets, which is like maybe physical verification, whether the fixed assets, property, plant and equipment exist or not, right? Second is they might have tested the opening balances. They might have tested all the additions during the year. They might have tested all the disposal during the year. They might have tested the overall depreciation calculation and the mathematical accuracy of fixed asset register, right? So these all kind of procedure, I'm sure they might have laid down in the instructions, which is like agreed upon procedure. And then once the component team has performed those, they will be reporting back that we have performed this procedure, which you have mentioned to us in the instruction. And if you have found any findings, so in agreed upon procedure report, we'll be reporting back the findings, right? And same way, there might be possible that they may ask you to do the examination. In that case of scenario, like they will just says, test the fixed assets or test the inventory balances, test the cash and bank balances. So here it's being your responsibility to apply your professional judgment, what all audit procedure or examination procedure is being relevant for you to gain the reasonable assurance over the respective financial statement line item. So that comes in examination engagement. Agreed upon engagement, where they will specifically mention you like these are the procedures you need to perform. Examination engagement, where you will be taking professional judgment to reach to the conclusion on the respective financial statement line item based on the reasonable assurance you have achieved. And in examination engagement, you'll be giving opinion, whereas in agreed upon procedure, you'll be giving findings. And third, the midway is the review engagement. In that, they will ask you to perform the review of the respective financial statement line item. So maybe like they may ask you to perform month-on-month review of the sales for the respective financial respective entity or respective location, or they may ask you to do the review of litigation claim and assessment, right? Or they may ask you to perform the review of gross margin analysis. They may ask you to perform certain analytical procedure and review those, right? So that kind of engagement is called review engagement for respective financial statement line item, not the overall financial statement or maybe a financial statement assertion. So there, the scope is limited to review. And in review, you perform inquiry procedure and what all procedure you perform in review engagement?
Inquiry and analytical procedures.
Inquiries and analytical procedures, right? And you obtain a limited assurance, right? Not the reasonable assurance. What assurance you obtain for the review? Limited assurance, right? And now in this context, if you see the first table in which we have 3 boxes, then you can correlate what we have discussed with what is being required for the examination. First box, if you see examination engagement. So in examination engagement, they will tell you for this financial statement line item, you need to perform the examination engagement and provide us your opinion. So here the result is you need to provide the opinion. First point, if you see, the result of examination is the opinion. Second is, it by performing the examination procedure, you obtain a reasonable assurance, right? Which is high but not absolute level of assurance. So reasonable assurance, we all know, is a high but not absolute, because whether it's an examination or it's an audit, it's always be subject to sampling risk, or it's always be subject to detection risk, right? So we cannot give absolute assurance, but we can give a reasonable assurance, right? Third is express opinion about whether the subject matter is in conformity with the criteria or whether such assertion is fairly stated or not. So here in the examination engagement, you'll be performing detailed examination, which is equivalent to an audit, but it's for financial statement line item or assertion or any specific statement. That's the difference, right? And here you will be obtaining a reasonable assurance and giving an opinion. Make sense? What is an examination engagement? Any doubt?
No, sir.
Okay. So now coming to the second box, which is review engagement. In review engagement, you'll be issuing a conclusion statement. So here you'll be performing inquiry procedure and analytical procedure and obtain a limited assurance. And you'll be express the conclusion about whether any material modification should be made to the subject matter in conformity with the criteria or the assertion. Right? So the conclusion statement should be made on the subject matter, whether the subject matter is in conformity with the criteria mentioned or the assertion required. Third is agreed upon procedure. Agreed upon procedure, you will be getting the procedure which you need to perform. Here you will not be applying your professional judgment. You will be doing what has been asked you, what has been told you to perform those respective procedures. So here, no professional judgment of the auditor in selection of the procedure. Here the procedure is being given to you by the respective primary team or group audit team, or maybe the respective party who is advising you or who has assigned you the agreed upon procedure. And objective of agreed upon procedure is to perform specific procedure on subject matter or on assertion. And at the end of all the procedure you have performed, you will be reporting the findings, not the opinion. Right? So report the findings without providing an opinion or conclusion. So you are not giving any conclusion, you are not giving any opinion, you will be just issuing the findings, you will be providing the findings only. Right? So these are the three category of engagements comes under the SSAE's report on attestation engagement. So within this, the next important topic is prospective financial statement. Prospective financial statement include two categories of financial statement. One is financial forecast and second is financial projection. Do you have any idea what is financial forecast and what is financial projection? Any idea?
So forecast is the difference between the actual and the projection. I mean the budgeted.
How about others? Now that is called budget versus actual analysis.
Okay.
What is financial forecast? Ayush, Gurmehar, Kush, Namisha, Dipti, Rachita, Pranjali, Arjun. Any idea?
So basically, financial forecast would be something which we are expecting in the future. Like if we have this month's sale, like for this quarter 1, we have sales, and what is the forecast for like next quarter or next quarter? That is the forecast, like what we are expecting in the coming months or coming time. that can be a forecast.
Mhm.
But financial projection would be like, I don't know, we have certain, I can't explain the difference between these two. Yeah,
Mhm.
I think I know financial forecast, but I can't tell the difference.
How about others? Gurmehar, Kush, Nimisha.
The forecast is what like usually the management would generally have, right? So they will have like a sales forecast or what they foresee that how that account balance or a particular entity's financials are going to move in which direction.
Mhm.
So more like an estimation basis the historical data that they have. So let's
Mhm.
say looking at the trend, looking at the history of how the accounts has or the balances have moved, they will have a particular forecast of how they foresee, let's say, the balances would move in the upcoming year.
Mhm.
And that's what I would ask. Like I have seen or what I would believe is a forecast. Uh,
What is financial projection?
projections, no idea, sir. Honestly, I mean, must
Any
be a
rough?
minor
Maybe
difference, but not sure.
This
so
is
maybe in this case, for financial projections, they might be looking at some kind of uncertainties, getting them into consideration, and then making some changes in the forecast. That's what I can think of. Because in
Mhm.
financial forecast, we are not taking into consideration any of the uncertainties. We are purely driving those numbers basis the historical data or current output or current production. But in projections, again, it's a estimate wherein we are factoring the uncertainties. Like for example, COVID was there some time back, or some others uncertainties.
Mhm.
Just a guess.
Good one. Kashish, Arjun, Garvit, Rachita. Any guess from your side? Come on, be participative. Mhm. Yeah, Nimisha, Dipti, any idea?
Financial forecast, so everyone has explained really well. I think it's just the basis, जो भी whatever is going on in the business currently and whatever the management expects, with
Mhm.
whatever direction management expects their business to head into.
Mhm.
That's what a financial forecast is. But in case of financial projections, it is
Mhm.
similar to a forecast, but management takes a lot of hypothetical assumptions.
Mhm.
Could be a case of a new business line that they've introduced or something. So they would
Mhm.
look at their historical results and they would take a lot of hypothetical assumptions
Mhm.
for that new business lines and new business line, and then come up with a number of uh,
Mhm.
projections or results that may result as a result of those assumptions. That's what my understanding is.
Then
Yeah.
I'm thinking of an example, not sure whether it will fit in on here or not. So, for
Mhm.
example, before COVID, if the credit period for certain customers was 90 days, right?
Mhm.
And post COVID, that credit period has now been reduced. It has not, maybe that can be a case of wherein, you are considering those factors from historical data and then making your projections ahead. Just
Mhm.
again, you tell us whether it's right or wrong.
No, no, no. Like it can be, yeah, for sure. No, thanks. I think thanks everyone for sharing your thoughts and ideas. And it looks very, you guys are very close to what is being mentioned over here. So in prospective financial statement, there are two category of financial statement. One is financial forecast. I think most of you have explained very well about the financial forecast, and I'm sure you might have seen in the companies as well. Like generally each company make their financial projections, right, make their financial forecast, sorry, right, in that like they look at the historical trend their company is performing and do some plus and minuses and certain adjustment based on like best of their beliefs or best of their knowledge, like what will be the financials number month over month in future. And every month, like every year, the company make like financial forecast or budget for the next 12 months, and then every month they do budget versus actual, like I think Rahul was explaining the budget versus actual. So those things like budget, preparation of the budget for the next 12 months is a financial forecast. And every month you are doing budget versus actual analysis to ensure whether you are heading in the same direction which you have budgeted or which you have forecasted initially. Whereas financial projection are also very much similar to financial forecast, but it has been given very thin difference where you will consider one hypothetical assumption. And based on that, you make the changes in the financial statement of your actual historical financial statement. And for example, let's say you are expecting to get into an acquisition. So what will be your financial statement look like after the acquisition, post acquisition? So that is a financial projection. For example, for the year end December 21, your financial statement says, let's say you have an assets of $100 million, you have a liability of, let's say, $60 million, and you have equities of, let's say, $40 million. And you are planning to acquire a new company for, let's say, $100 million. Right. So what will be your equity, what will be your debt, and what will be your liabilities overall, and what will be the overall assets, and how your overall financial statement will look like if you do the acquisition of that company. Right. So that comes in the financial projection. Same way, like for example, you have multiple segments in your company and you wanted to dispose of any segment which is a loss-making segment. Then what will be your financial statement if you remove that particular segment from the overall financial statement and consider the impact of that removal and what all money you'll be getting by removing that or spinning off that particular segment. So those all are hypothetical assumptions basis which you recalculate your existing financial statement, or you can say historical financial statement, to the projected financial statement. So that's a very thin line difference between like financial forecast and financial projection. Make sense? Yeah.
Yes, sir. Yeah.
Okay. So let's look at the theory which we have mentioned over here in the box. If you see left hand side, financial forecast. Financial forecast is basically expected financial statement to the best of the responsible party knowledge and belief. So responsible party generally here is a management. Based on the responsible party assumption reflecting the condition it expect to exist and the course of action it expect to take. For example, budgets, financial forecasted statement, you need to submit to the borrowers or to the lender. Like I'm sure you might have seen like CAs in India make a lot of financial forecast when they go for a lending or when they go for a financing options, right? So any of your friend or family member is doing business and they have taken any working capital loan, or they have taken any business loan, any idea? OD limits or credit limits or something like that.
Sir, I have seen financial focus happen, not with family and friends, but in the previous organization where I was working, basically the head office was in Australia. So what head office was doing was they were providing some kind of management fees to the Indian business. Okay, and that management fees was basically to run its operations initially for 4 5 years. So what the Australian management used to ask from the Indian management was a financial forecast for next 6 months. Only basis that they would be able to, provide that management fees, which helps in running the business in India. So they were preparing financial forecast for the same to be, earlier first to submit it to the Australian management and then to the Indian banks as well, because they had to take loans as well as get the management fees from the Australia group. So here I had seen that financial forecast were being prepared.
Yeah, very good. Thanks, Ayush, for sharing your experience. So, what Ayush has explained, like you have seen a company which has, like you can say, is a subsidiary or maybe an office in India, but which has holding company in Australia. And to run the Indian office, they're providing management fees to the Indian entities. But how that management fees is being derived is based on the financial forecast which they submit. Right? That's a very good example of financial forecast. Anyone else? Like in India, if you have seen, like when you go for a funding requirement for the bank, So you need to submit like financial forecast for at least like 2 years or 3 years or minimum at least next 12 months. Depend on like whether you are going for a working capital fund requirement or you're going for a short-term loan or long-term loan. For that, you need to submit like respective forecasted financial statement. Financial projections are being generally used when you are planning for any acquisition, when you're planning for any merger, demerger, disposal of your respective segment. In that case of scenario, generally, we make financial projections. Right? Make sense?
Yes, sir.
Yes.
Okay. So let's move on to the next box, which is prospective financial statement, either used for general purpose or it is used for the limited purpose. So in some case, prospective financial statement are being used for the general purpose, but most of the time it is always have a restricted use. So if you are making financial statement forecast for the IPO purpose, for the offering statement purpose, which is going to get submitted with the Security Exchange Commission. So those are the statements available in the public domain, basis which public make the investment in your company through an IPO. So in that case of scenario, the financial forecast which you will be auditing and you will be signing off is being available to the public at large for the general use. And other scenario is being like financial forecast or projected financial statement has been made specifically for the requirement of the borrowers. Right, like I said in earlier example, for the lending of money, you need to submit the financial forecast to the bank or to the banker, to the NBFC or to the lending company from where you are taking the funds. Right, sometime like major customer also required the forecasted financial statement, like in case like the example which Ayush has shared. So in that, like Australian company, which is like a holding company for Indian subsidiary, is actually a customer of the Indian subsidiary because they are getting management fees. They are getting the revenue from the Australian company based on their financial forecast in India, right? Make sense? Have you heard about cost plus entities?
Yes, sir.
Yeah. So any idea what is that?
If I'm not wrong, this is similar to wherein transfer pricing happens, right? Like wherein there is a cost plus entity that will, let's say, within the entity, they will sell the product, but with a markup or something like that.
But the cost plus would be what I remember is like we get to know the cost of that particular production cost or whatever it is, and plus there is a fixed markup which we charge on that fixed cost on the cost which the companies think that would be cost plus markup on basis that which we are charging from someone or
Yeah.
recording in our books.
And I think, sir, if I remember correctly, one of the clients I was working on, what they used to do, they used to provide, I think, some sort of service like a warehouse service or something, and they would charge the primary, let's say, entity for that, but that will have a markup along with it.
How many of you work in offshore company?
We all, sir.
So your company is charging revenue based on cost plus markup. You know how like EY, GDS or KGS bill to the US company or to the respective entity. It's cost plus markup. So whatever is the total, you can say employee cost and plus overhead cost plus their margin divided by number of hours. That's how they derive to the fees for the respective hours charged.
सर एक्साइज पढ़ते थे ना उसमें भी एक वैल्यूएशन के अंदर कॉस्ट प्लस बेसिस मेथड था
So it's a very famous and very renowned
काफी
method.
जगह यूज होता है ये वाला.
Yeah, it's used in accounting, it's used in income tax, it's used in like GST, VAT or excise, which was earlier. Yeah. So cost plus markup is basically where you are calculating the overall cost and adding the markup and taking the revenue. Same way like which example Ayush has shared. So in the financial forecast, what exactly they were doing? They were estimating the total expense and adding the margin and requesting them, this is the management fee we will be requiring to run the business for next 6 months.
Right, sir. Right. Yeah, they were doing the same thing.
Right. So this is what it is. And right, in that case, it will be for the limited use. The financial forecast or projected financial statement is limited use for the customer, for your parent company. Right. And it can be for the investor perspective as well. So financial forecast or projection are made for the specific party and for the specific purpose. Those financial statements are of limited use and restricted use. But when you are making financial forecast for the IPO purpose, it is being for the general use. So you need to keep in mind when it will be for the general use and when it will be for the limited use. And accordingly, in your opinion, if it is for the limited use, you need to add additional line about the limited use or restricted use of the financial statement. Make sense? Yes, no?
Yes, sir.
Yes, sir.
Okay. Now jumping into the compilation report and report on examination of prospective financial statements. So you can do the compilation or you can also do the examination. So depend on which category of engagement has been assigned to you. Sometime as a CPA, the company may assign you the compilation of the forecasted financial statement or prospective financial statement. And sometime they may assign you examination engagement. Right. So here you never do audit for the forecasted financial statement. Either it will be an attestation engagement or it will be a compilation engagement. Make sense? You will never do the audit because audit is being done where you have actual data or you have actual transaction, where you have actual, you can say, supportings. Then only you'll be performing the audit, right? So these are forecasts. These are projections. So you cannot perform the audit. So you can do only either attestation engagement or a compilation engagement. Make sense? Yeah, Jaspreet, Ayush, Kashish. Make sense?
Could you please repeat?
So, sir, compilation, एक बार repeat ही कर दो, sir.
So for audit engagement, when you perform the audit, you test the actual supporting, right? Like invoices, purchase orders, sales order, payroll register, right? How do you perform the audit? Based on the actual evidence, right?
Yes, sir.
Yes,
But
sir.
when for the forecasted financial statement, you may not have actual data, right?
Yes,
Actual supporting.
Yes.
So you will always be performing either an attestation engagement or a compilation engagement. You can never perform the audit engagement.
Okay.
Make sense?
Right.
Okay.
Because you do not have underlying supporting document. It's just a projection. It's just a forecast.
Okay.
Sir, got it.
So look at left-hand side. If you have been involved to compile the projected financial statement or forecasted financial statement, they may ask you to prepare or compile. So what report you'll be issuing and what all content should be there in your report. First, it is being based on SARS. Compilation report is based on SARS and attestation or examination engagement is based on SSAs, right? Make sense? Compilations come as an accounting services. Accounting and review services come under SARS. Make sense? Yes, no?
Yes, sir.
Yes, sir.
Keep it different. What is SARS? What is SSA? And what is gas? What is gas? We use for audit purpose, right? For attestation and examination, we use SSAs. For accounting and review services, we use SARS, right? So compilation come under the accounting services. So we'll be using SARS. Examinations comes under the attestation services. So we'll be using SSAs. Make sense? Second is identification of prospective financial statement presented by the responsible party. So you'll be saying like these are the prospective financial statement which we are compiling. And a caveat you need to mention that the prospective result may not be achieved, right? Because whenever you are signing off, general public has different notion in your mind. They trust on you. So you need to clearly mention that these are forecasted financial statement. These are projected financial statement. Actual result may not be achieved. Because like generally, like projected financial statement or forecasted financial statement and the actual financial statement always have some or the other differences. Right? Make sense? Have you guys seen like budget versus actual analysis?
Yes, sir.
Yes, sir.
Right? So in that you have seen like every month or every quarter or every semi-annual or every year, there's a difference between budget and actual, right?
Sir.
Yes, sir.
So here, if you are compiling the budget, so it's being your responsibility to communicate to the user of your compilation report that these are prospective results, these are budgeted results, these are forecasted results, but actual results may not be achieved. Right? So you need to specifically mention this statement in your compilation report. Fourth, a statement that a compilation is limited in scope and does not enable the practitioner to express an opinion. So compilation report, you do not express an opinion, right? Yes, no? In compilation report, do we
Yes.
express an opinion?
No, sir.
No. So you need to specifically mention practitioner is unable to express an opinion or any other form of assurance on the prospective financial statement or the assumptions considered here. Fifth is a statement that the practitioner assume no responsibility to update the report for event and circumstances occurring after the report release date. So in compilation engagement, your responsibility is up to the date of compilation. After that, if there is any event happen, so for those subsequent event, you are not responsible. And that you need to clearly mention in your compilation report. And then signature, state, city, and date. Right? So this will be the format of compilation report on the forecasted financial or projected financial statement. Come to the right hand side for the examination of prospective financial statement. So you will be using SSAEs. Identification of prospective financial statement, including the period of time to which the prospective financial statement relates. So you need to clearly mention what are the financial statement and for which period it relates to. Third thing, a caveat. Here also you'll be mentioning that the prospective financial result may not be achieved. So this caveat is mandatory whenever you are signing any kind of report on the projected financial statement or forecasted financial statement. So you mandatorily need to mention this caveat that the prospective results may not be achieved. Fourth is identification of responsible party and their responsibility. So who is the responsible party? That is management. And the management responsibility also you need to mention here. So this is an kind of opinion. Right? In examination, your end result is opinion. In compilation, you're not giving any opinion. But in examination, you're giving opinion. So if you're giving opinion, you need to mention the management responsibility as well, auditor responsibility as well, and your opinion as well. So fifth point is practitioner responsibility. Like in the audit engagement, we have seen in the audit report, we mentioned the auditor responsibility. Same way here, you'll be mentioning the practitioner responsibility on the examination engagement is to express an opinion based on the examination he or she has performed. Right? Sixth point is a statement that the standard require that the practitioner plan and perform the examination to obtain a reasonable assurance. So here, like in audit report earlier, which we have seen, in the examination report, you'll be mentioning that the standard required, this SSAEs require that the practitioner plan and perform the examination to obtain a reasonable assurance. Here also you'll be obtaining a reasonable assurance, not the limited assurance, right? So in examination, you issue a reasonable assurance report. Make sense?
Yes, sir.
Yes, sir.
For review, it's limited assurance. For examination or audit, it's a reasonable assurance. 7th point is a statement that the practitioner believe that the examination provide a reasonable basis for an opinion. So here you need to clearly mention that all examination which you have done that provide you the reasonable basis to provide an opinion, to provide the opinion which you are issuing to them. After that, nature of examination engagement. So what kind of examination engagement you have performed? Opinion paragraph with the caveat which we have mentioned in point number 3 above. What is the caveat? The prospective result may not be achieved. So this you need to mention after the opinion paragraph. And then after a statement that the practitioner assume no responsibility to update the report for event and circumstances occurring after the report release date. So if there is any subsequent event after the report release date, for that CPA is not responsible. And CPA need to mention that clearly in their report that it is not my responsibility. Lastly, signature, state, city, and date. And then you are done with the examination report, right? So what are the two categories of report you give on financial projection or financial forecast? One is compilation, other is
Examination.
examination. Why don't we give audit report?
Sir, because
we don't
we
have
are
the
not.
Yeah.
evidence for prospective financials.
Yeah, you are saying.
So I was saying that in an audit, assurance has to be provided, but while we are having a compilation or an examination, we don't have to give that respective.
Absolutely
So
wrong.
basically, financial statements are prospective, not
Right.
like that. So basically, actuals.
जागो मोहन प्यारे.
यही बोलना चाह रहा था मैं, गलत बोल दिया कुछ.
भावनाओं को समझो.
भाई अब करना ही पड़ेगा जो गलत बोल रहा हूँ.
Yeah, Nimisha, Dipti, Kush, Arjun. What is prospective financial statement and what is forecasted financial statement? Are you guys here? Mr. Kush, Gurmehar, Jaspreet. What is compilation report and what is examination and how they are different?
But in compilation, we need to express an opinion, and in examination, we are giving the reasonable assurance.
Partially correct, partially incorrect. Yes, Mr. Jaspreet Singh Lama, Gurmehar Singh Bagga.
In compilation, we actually it's actually limited in scope. Like we only prepare the financial statements and we do not express an opinion. But in examination, we express an opinion on the subject matter that is being examined. It could be anything that has been, like we use our own judgment and we do whatever procedures are necessary. That's what we do.
Yeah, very good. Thanks, Nimisha. Okay, so shall we jump on to, let's look at some notes over here. A practitioner should not attest on prospective financial statement that exclude the disclosure of summary of any significant assumption. So if you are doing an attestation engagement for the prospective financial statement or forecasted financial statement. So disclosure of the adjustment or significant assumption which management has taken to prepare those forecasted financial statement or prospective financial statement should be part of those financial statement. If management wants not to disclose those assumptions, then for a CPA, it is better to withdraw, because then it shows like management intention is not right? In that case of scenario, it is always good to withdraw from the engagement. A practitioner should not attest on financial projection that exclude either an identification of hypothetical assumption which they have taken, a description of the limitation on the usefulness of the presentation. If any of these two are missing, then you should not be signing up that report, right? Now next is pro forma financial information. Have you heard about pro forma financials?
No, sir.
Okay.
What is a professional performer invoice?
Okay, pro forma financial statement is also like a prospective financial statement. So what we do in this pro forma financial statement is you have historical financial information. For example, you have audited financial statement for December 21. Now management wants to analyze if, let's say, they have done with financial year 2021 and audit is all done, and in 2021, let's say they have not achieved the desired result, and after that they are doing a debrief meeting within the management, and management wants to know, for example, if they spin off or dispose of one segment which is a loss-making segment, then what will be the overall financial statement probably would be, right? They do all like decision making analysis. How do you generally like get into the shoes of management, and then try to analyze the financial statement from different perspectives to understand the root cause of any problem or root cause of any failure to achieve the desired result. Right now, for example, December financial statement has been audited and company has achieved like overall, you can say, net profit of $100 million, whereas they have projected for, let's say, $250 million, which is like significantly lesser than the projected, you can say, profit for the company. Now management is doing like root cause analysis. So when they are doing the root cause analysis, they will be looking at the financial statement, historical financial statement in the different scenarios. So in the different scenario, let's say, for example, they are doing, they have, let's say, 10 customers. So if they exclude one customer for which their business are loss making, and they only serve to rest of the 9 customers, what would have been their profit? Are you getting my point? Are you getting my point?
Yes, sir.
What is ये हो गई कि you have only done adjustments in the last financial statements. Nothing new is being made as such, right?
Let me present whiteboard to explain this.
सर ये hypothetical scenario नहीं हो गया?
Yes,
मतलब
yes.
तो फिर जो ऊपर हमने जो पढ़ा था वो भी तो फिर hypothetical related ही तो था.
That is for future and this is for historical.
Okay.
So for example, let's say you have customers. One second. So company so they have $100 million profit, whereas their budget was $250 million. So now they are doing like root cause analysis, why they are not able, why they have been short of 150. So they are doing like scenario analysis. Customer, they have, let's say, 1, 2, 3, 4, 5, 6, 7, 8. Let's say they have 8 customers with whom they have done analysis. So here they are getting like $10 million profit. They are getting 20. They are getting 30. They are getting 50. They are getting 60. They are getting 10. And how much is total? 10, 20, 30, 60, 120, 130, 180. And this customer is being giving the loss of 30, and this customer is giving loss of 50. So if you see the total is coming $100 million. So they have done this analysis and they come to know like these two customers are loss-making customer and why we are doing business with them. If they exclude these two customers, their profit would have been 180. Make sense? Are you guys with me? Right? And then the second study they have done is the product. So they have, let's say, A, B, C, D, and E, 4 products. So product A is giving them profit of $50 million. Product B is giving a profit of $20 million. Product C is, let's say, giving $40 million. And product D is, let's say, giving $60 million. So how much is, sorry, let's keep it 30. And product E is something which is giving them loss of $20 million. So in that case of scenario, the total profit is being expected, is being coming as how much? 50, 20, 70, 170 minus 20, 150. Whereas if they would have not produced product E, their profit would be increased to 170. Right? So this way they can take the decision to discontinue producing E and discontinue serving to these customers, and maybe like third and fourth type of analysis to reach to the conclusion like why this 250 has not been achieved. So these kind of scenario analysis management do and prepare the different form of financial information. Make sense?
Yes. Yes.
So now just keep these two examples in mind and let's try and understand with the notes. So the report on performer financial informations. So in performer financial information, what are the performer financial information? Your historical financial information, that means your previous year, let's say audited financial statement plus performer adjustment. That means these two adjustments which we have seen in the whiteboard. So one adjustment, discontinuing two customer, it will increase $80 million of your profit, and discontinuing the product E, which will increase $20 million. So $100 million, and let's say the other third analysis they have done and they reach to like $50 million profit, how they need to increase, right? So those all are called performer adjustment. So the $80 million, $20 million, and the another $50 million is a performer adjustment. So that means your historical result plus performer adjustment will give you performer financial information. So here you have original audited financial statement, and then there's a 2-column plus and minus of all the adjustment, and the third column is the total balances. That's how performer financial information are being made. So here you are analyzing the different scenario based on the respective assumptions for the historical financial statement, but not for the forecasted, not for the projected financial statement. Make sense? Yes, no?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. What is perform adjustment?
So making adjustment to the historical data, basically. Hypothetically, so we remove certain areas in order to reach to the in order to make that analysis in a gooder picture. So basically that is a performer adjustment,
right? So like wear a hat of like CFO of any company or CEO of any company. So if, for example, your company has not achieved the desired result, so you will be interested in knowing the root cause or not? Yes,
Yes, sir.
Yes,
right?
sir.
You'll be interested in knowing the root cause.
Yes.
And to reach to the root cause, you might be doing root cause analysis, and you might be requesting your management or your staff to perform the root cause analysis. So that may be like understand like customer wise whether you are making profit or not, segment wise you are making profit or not, location wise you are making profit or not, what are the, like you can say, waste or resources which you have not properly utilized that has resulted into loss, right? All kind of analysis you will be making. And for all those kind of analysis that may give you certain result, some may be positive, some may be negative, right? So all those plus and minus two columns are called performer adjustments. Make sense? This is for the management reporting purpose, majorly for the internal management reporting purpose or internal investor reporting purpose. So performer adjustment is the effect of proposed transaction or event on historical financial information. It is based on the management assumption and give effect to all the significant effects directly attributable to the transaction or the respective event. Performer financial information is commonly used to show the effect of transactions such as business combination, change in capitalization, disposition of significant position, change in the form of business organization, proposed sale of security and application, right? And the presentation of performer information should be described the transaction that reflect performer date, source of the historical information. Generally, we take audited financial statement, significant assumptions we have used, and any significant uncertainty about the assumption. So the assumption which you have used, if there is an uncertainty in that assumption, that also you need to be mentioned specifically. So it may be like proposed merger, it may be buy, it may be lease, it may be evaluation of make or subcontract, right? It may be an evaluation of proposed disposal of any assets or operation. Here, you will be issuing two types of report for the performer financial. One is examination and the second is review report. If as a CPA they hired you, they might be request you either to perform examination or to perform a review report. So if you are performing examination report, you need to provide a reasonable assurance. So here, why you can how you can provide reasonable assurance based on the historical financial statement, which are generally like audited financial statement, and then you'll be testing the assumption which management has taken for the respective financial statement line item to provide a reasonable assurance. So what will be your report? Should be in your report, you'll be mentioning the title independent CPA report. So as this is an examination report, so here independence is mandatory. When independence is not mandatory, which type of report independence is not mandatory?
compilation report.
Compilation
and agreed upon procedure.
No,
Attestation.
in preparation report. In preparation
of answers.
Yeah, preparation engagement and compilation. Independence is not mandatory, but either it's agreed upon procedure or it's review procedure, or it's an examination procedure, or it's an audit. So independence is mandatory in those engagements. So here we are discussing review and examination. In both the cases, independence is mandatory. And when you are independent, you'll be mentioning on the top of your report that independent CPA report. On the review, or examination. Second is identification of pro forma financial information, including time and period covered. So that will be comes in the review report or the examination report. Either report you'll be issuing will be specifically identifying the pro forma financial information, period and time covered in those financial information. Third is reference to the pro forma adjustment. So there would be separate, you can say how we have notes to account, separate disclosure for the pro forma adjustment. So all the pro forma adjustment need to be compiled in a single summary that should be attached to the pro forma financial statement, right? So whether you are issuing a review report or an examination report, in both the scenario, you should have pro forma adjustment summary, which is clearly mentioned all the adjustment in the historical financial statement, which you have taken as a base from the previous year audited financial statement. Fourth is identification of criteria against which the pro forma financial information was measured or evaluated. So you need to clearly mention that the criteria which they have taken based on which pro forma financial statement need to be measured and evaluated. Fifth one is a reference to the financial statement from which the historical financial information is derived. That means, for example, if you have taken previous year audited financial statement, you need to clearly mention in your review report or examination report that financial statement has been derived from the historical financial information of audited financial statement of this year. Then sixth one is identification of responsible party and a statement of their responsibility. Same way how we mentioned management responsibility paragraph. Same way you need to mention the responsible party responsibility paragraph in your report. Then after a statement that the practitioner responsibility is to express an opinion based on the examination. So in examination engagement, you are giving opinion. But in review engagement, you'll be mentioning a statement that the practitioner responsibility is to express a conclusion on review, not an opinion, right? Eighth is examination conducted in accordance with SSAs. Here also review for this pro forma financial information is also be conducted in accordance with SSA. So this is the difference. If you look at the note I specifically mentioned here. Look at this note I specifically mentioned here so that you will not get confused under which standard will be performing either review or examination of pro forma financial information. Both comes under SSAs, right? Review of pro forma financial information should be conducted in accordance with SSAs, not SARs. So here you may get confused. It's a review engagement, but for the review of pro forma financial information, you'll be using SARs. Sorry, SSAs, not SARs. Make sense? This is a major difference. Ninth one is a statement that examinations require to plan and perform the examination to obtain reasonable assurance about whether the pro forma financial information is accordance with the criteria or not. So you need to mention clearly the examination require, plan and perform the examination procedure to obtain reasonable assurance. Whereas if you see right hand side, the statement that the review require, plan and perform review procedure to obtain limited assurance. What are the review procedures? What are the review procedures?
Inquiry analytical procedures.
Right. And what level of assurance you obtain from review?
Limited assurance.
Limited assurance about
And we will also give opinion.
I think there's a
conclusion.
Pro forma financial statement, not pro forma. Right? Fifth line in this one, 0.9.
This one?
Over here, it's after perform the review procedures to obtain about whether the performa likha hai, right? So shouldn't it be proforma? PRO.
Thank you. Perform financial information is in accordance with the criteria. So that's the difference between review engagement report and the examination engagement report. So in examination, you'll be mentioning the management assumption and performa adjustment both. So management assumption provide a reasonable basis for presenting the significant effect directly attributable to the underlying transaction, and performa adjustment give appropriate effect to those assumptions. So you need to clearly mention what are the management assumption and how, and you need to give the reference to the summary of all adjustment relating to the performa financial information in the specific summary or notes to accounts, or maybe a separate statement if they are mentioning. After that, a statement that an examination involves performing procedure to obtain evidence about management assumption and performa adjustment not assets. Performa adjustment. So here, like, you need to clearly mention in examination, you will be performing the procedure to obtain the evidence to test the management assumption and performa adjustment. Whereas in a review engagement, you will be mentioning a statement that the review is substantially less in scope than an examination. Right? 11th point, it is important one. A statement that practitioner believe the examination provide a reasonable basis for opinion. So here you have done examination, and the examination is providing you reasonable basis of opinion, whereas in review you are not issuing any opinion, you are issuing conclusion. So that's the reason this 11th point is not applicable. So that's the reason I mentioned in bold and do over here. If you see, most of the time you might get confused, like it's do, it's like similar, right? But 11th point is not applicable in a review engagement. Right. 12th point, a paragraph explaining the objective of performa financial information and its limitation. So that the same you need to mention for the review engagement as well. And then the opinion for the examination engagement, conclusion for the review engagement. Last, signature, city and state and date is same. So that is same in both category of engagement. Right? So how do you draft like report on the performa financial information? Either it will be examination or it will be review report. In both the cases, you have to be independent, right? In examination, you are obtaining a reasonable assurance by performing your examination procedure. In review engagement, you'll be performing inquiry and analytical procedure and obtaining a limited review, and you are issuing a negative assurance. And you'll be issuing a conclusion, not the opinion. Make sense?
negative assurance एक बार बताओगे फिर से? I guess मैंने miss कर दिया.
अभी तक बताया कहाँ है?
अच्छा नहीं बताया? Okay.
What is negative assurance? Ayush Jain, do you mind explaining what is negative assurance? What is positive assurance? Oh, Ayush is not here. Oh. Okay.
I am here, sir.
So what is positive assurance? What is negative assurance?
Yeah, positive assurance is that when the auditor is giving an assurance that the misstatements are free from, that the financials are free from any material misstatements or like that. And negative assurance is that negative assurance is when
yes, Mr. Jain.
Let me think for a minute. I'll get back.
Yes. Just don't Google it out.
No, sir. No, I won't Google it. I'm just thinking again. Give me a minute. Yes, sir.
Yes. Anyone else would like to share what is positive assurance, what is negative assurance? And when do we issue positive assurance and when we issue negative assurance? Yeah, Kush, Kashish, Nimisha, Rahul, Dipti, Pranjali, Garvit. Any idea? Or it's a difficult question that Gurmeer has asked.
Sir, in negative assurance, I think we are not sure about is there any kind of material misstatement or not. We are not sure, so I guess that's the main difference.
Not really. Yeah, Kush, just breathe. Any idea? Nimisha?
So for positive assurance, I think we are just agreeing with the information that is presented and giving an opinion on that. And for negative assurance, it's like not agreeing with the information and actually disclosing that.
No, that's wrong. Absolutely wrong. Wrong guess.
Sir, I won't be able to get back to you. Please explain. Sir, नहीं आ रहा याद से.
Oh my God! I did my CPA. I learned it. I passed it.
Sir, याद ही नहीं आ रहा.
Okay, so no worries. Like positive assurance when you perform the audit or examination and you obtain a reasonable assurance, and in that you'll be specifically mentioned in your audit opinion that we have obtained sufficient and appropriate audit evidence to give the opinion on the financial statement, right? There it is a positive way of drafting the audit report that you have obtained a reasonable assurance and you are giving a reasonable assurance to the user of the financial statement, right? When you perform the review engagement, so review, there you'll be mentioning that review is limited in scope. Review is limited in scope and will not provide the reasonable assurance. But nothing has come to our attention that may, during the review, nothing has come to our attention that may result into any material misstatement. So two type of reports, like one report you are seeing where you said like I have performed the audit and obtained a sufficient appropriate evidence that the financial statement are free from material misstatement, right? One statement is that in audit report. Second statement is that we have performed the review which is very limited in scope or very less in scope than the audit, which is very less in scope than the audit. But however, nothing has come to our attention which may result into material misstatement of the financial statement. So it's negatively drafted that nothing has come to our attention which may force us, which may give us a thought that there is a material misstatement. And positive side, we are saying we have done the audit and we says the material, there is no material misstatement in the financial statement. So that's way of drafting the audit report and review report. Audit report is generally give you the positive assurance, and whereas review report is give you the negative assurance that nothing has come to our attention which may make us believe that there is any material misstatement. Make sense?
So sorry, this was like review reports ऊपर भी कहीं जगह थी. There we did not use this word negative assurance. So ये performance से related हम ये word terminology
No,
use कर रहे हैं, but
reviews
it's an understanding, no? कि
no,
limited है तो वो negative हो गई basically.
Yes.
Sir, limited है तो फिर sir restricted भी होगी. Restricted है तो sir फिर इसी वजह से.
No. Restricted is different than limited. Restricted when you are making for those specific party for specific reason, then it is restricted.
Okay. Sir, limited है तो मतलब scope ही हमारा
means
limited है.
review report.
Okay.
So जो एक हम external confirmations लेते थे, उसमें भी I think there was like this negative assurance confirmation and positive. उसमें भी same ही चीज़ थी.
Oh, that's a confirmation. No, that's a confirmation procedure.
Right.
That's a confirmation procedure. That's a procedure, not a report.
Report, right. उसमें भी मतलब concept same था. Word से अगर inference निकाल रहे थे तो यही चीज़ थी कि जैसे पॉजिटिव का मतलब ये हो गया बेसिकली कि वी आर गिविंग अ स्ट्रेट फॉरवर्ड आंसर कि देयर इज नो मटेरियल मिसस्टेटमेंट इन द रिपोर्ट एंड नेगेटिवली इज
No,
लाइक
no, sorry. You are getting, you are mixing two things. The
Okay.
procedure were like confirmation procedure, you are saying, right?
right
So in
right,
confirmation procedure, we are sending two type of confirmation, positive confirmation or negative confirmation.
negative confirmation
Right? In the positive confirmation, there are like the blank confirmation.
Okay.
Right? So where we ask the respective party to fill the information or fill the amount which is being due to them or receivable from them.
Okay.
So that's called positive confirmation, in which like third party is giving you the specific amount or specific, you can say, terms of the agreement. And negative confirmation, in that you will be mentioning the amount, like this is the amount due from the company. If it is different in your records, then only you need to respond to us.
Okay.
Until then it is deemed if they don't respond to us.
Yeah, otherwise it will be deemed that the amount which we have sent it to you is right.
Okay, sir.
Both are different things.
Right.
But here we are giving opinion.
Okay, got it.
Okay, so next one is compilation report. So for performer, you can do compilation, review, or attestation. So in compilation, if you're doing compilation of performer financial information, it includes a reference to the financial statement from which historical financial information has been derived, and the statement as to whether such financial statement were subject to audit, review, or compilation. For example, if you're doing for a non-issuer, any performer financial information, if you're doing a compilation engagement for any non-issuer. So previous year financial statement which you have taken as a base, it may be audited, it may be reviewed, or it may be just a compilation, right? It's not mandatory to be audited in US, right? So you need to give the reference, the basis financial statement which you have taken to review or to compile the performer financial information were in the previous year compiled, reviewed, or audited. So that you need to clearly mention in your compilation report. Make sense? Yeah. Sanchit, Gurmehar, Ashish. Can you hear me?
Yes.
Yes, sir.
Yes, sir.
So does that make sense? Point number A? Or
Yes,
any
sir.
doubt? Second is a reference to any modification of audit, review, or compilation report of the historical financial information. If the previous year report, previous year financial statement which you have taken as a base, was there any qualification? Was there any modification in the audit report, review report, or in the compilation report which you have taken as a base? If yes, then you need to mention that as well. Third is a description of the nature and limitation of performer financial information. So these three statements you need to mention in the compilation report, in addition to like name, date, signature, title, the basic stuff, right? Yes, no?
Yes, sir.
Yes,
So
sir.
let me. So for compilation, independence is not mandatory, right? Let's do some practice question. 1, 2, 3. We have 3 questions. Okay. So first one. Which of the following activity would be an instance of an attestation engagement? So which engagement out of this 4 or which statement looks like an attestation engagement? Preparing a client tax return. So is preparation of client tax return is a attestation engagement?
No, sir.
No.
What is that engagement? What is that engagement?
Compilation.
Non-audit services.
No.
That is called non-audit advisory services. Second is consulting with management representative of the firm to provide advice. So would it be an attestation engagement?
The consulting service. This is the consulting service.
The consulting services. Third is advocating client position on tax matter that are being reviewed by IRS. Is it an attestation engagement?
No, some legal support or something.
This is non-audit service, right? Tax advisory, non-audit service, right? Fourth is issue a report about the firm compliance with law and regulations. So that is an attestation engagement. Makes sense? Whether the company is in compliance with law and regulation or not. So you are reporting on that. Does that make sense?
Yes, sir.
Any doubt?
No, sir.
Okay. So let's jump into question number 2. What should the review accountant do if review accountant is unable to gather sufficient relevant evidence to support limited assurance conclusion? So you have been appointed to perform a review engagement, but you are unable to gather the sufficient and relevant evidence. That means you are unable to perform your inquiry procedure or analytical procedure. Right? So that is the call of the question. What is the call of the question? What is the call of the question?
That's why we are unable to do the inquiry analytical procedure. And
right. So what category of engagement it is? Review engagement. And what is the problem? Scope limitation, right? Is it a gap issue or gas issue? It's an accounting issue or it's a scope issue?
Gas issue.
Right. So when it's a gas issue, what all kind of reportings we do? Three type of reports: qualified, disclaimer, and
Withdrawal. Sorry, adverse.
Come on, Mr. Jain. Adverse is gap issue.
Gap issue, right?
Not a gas issue, right? Okay. So first one, change the scope of engagement to compilation regardless of the nature of evidence that was not able to obtain. So would you like to change the category of engagement if there is a scope limitation?
No, sir.
No? Right? Second is issue a disclaimer of review conclusion. Will you disclaim?
So scope to limited hoga limited assurance.
So what should be the review accountant do if review accountant is unable to gather the sufficient relevant evidence? Will you issue disclaimer of opinion, disclaimer of conclusion?
So I have a doubt here. So अगर second point में issue a disclaimer के जगह मतलब basically हमें answer देना होता था which is the best answer. So यहाँ पे issue की जगह consider होता है, consider to give a disclaimer of opinion. और फिर fourth option भी होता है जिसमें withdraw from the review engagement. उस scenario में अभी तो पता है कि the fourth answer is correct to withdraw from the engagement. But अगर consider होता, consider disclaimer opinion, तो वो priority में first नहीं आता.
Yeah, no, like it should be evaluate. Okay, evaluate disclaimer of opinion or evaluate qualification. Then those would be the better one.
Better option than withdrawal.
Then withdrawal. Withdrawal is last option. Yeah. Right? Make sense, everyone? Garvit, Ayush.
I am still confused. Why we are not giving a disclaimer of opinion? Why are we not giving a disclaimer?
Disclaimer क्यों नहीं दिए? क्योंकि gap issue तो है ही है.
Withdrawal is the or withdrawal is the last resort we have to opt. We could have gone for disclaimer of an opinion we should have, because I was reading chapter 4 yesterday, and उसमें भी एक ऐसा ही similar question था, मेरे को जो याद आ रहा है, मैंने कल ही करा है, and उसमें we had take the option for disclaimer,
but not qualified. First,
Yes.
you always evaluate whether it is like material enough, the scope limitation or not. If it is material, is it pervasive or not? If it is material but not pervasive, then qualified. If it is material and pervasive, then disclaimer. If like management is not at all allowing you to perform the procedure, then it's better to withdraw.
Okay, so we are getting to this thing from this line, unable to gather sufficient relevant audit evidence. So they're like, we're not able to get the information even, so the effect is pervasive, and we have to withdraw from the review engagement rather than giving a disclaimer. Okay. Okay.
Yeah, Gurmehar, with
So second point क्या था? एक तो third तो ये था कि हाँ, full information हमारे providing it, then we can withdraw it, and impact is pervasive, right? And what is the second point?
For considering for qualification.
हाँ जी sir, हाँ जी.
Yeah, material.
Okay.
If it is material, then qualified. If it is material and pervasive, then disclaimer. And if you are unable to, or if the management is not allowing you to perform those procedures, then it's better to withdraw.
Sure, got it.
Okay,
but
last.
In this case, the question doesn't suggest anywhere that the management is not allowing us. It could be like, this is such an open-ended question. Yahan pe it could have been considered as a pervasive impact as well. It is a very like
vague question.
Yeah, it's a very vague question.
Yeah. So you may see such kind of question as well. Then you need to apply your professional judgment, because like they are not allowing us to perform the evidence, whether I need to continue with the engagement or should not continue with that.
But withdrawal is generally done when we do not agree with the remedial action that the management provides in a particular situation.
No,
right?
that is also one situation where you can withdraw. That is one more situation. In this situation also, when they are not allowing you to perform the procedure, then also you can withdraw at first stage.
Okay.
Cool. Last question. Financial forecast and financial projections are type of performer financial statement, historical financial statement, attestation financial statement, or prospective financial statement.
So prospective. Yeah.
Okay, so what are the two categories of prospective financial statement?
Financial and forecast and financial projections.
Okay, and how the financial forecast and financial projection are different? Yes. What is the difference between financial forecast and financial projection?
Sir, in financial forecast, we are just studying the trends of the past, and basis that we are, making a conclusion about what sales or whatever the financials should be in future. But in case of financial projections, we are taking specified assumptions, hypothetical assumptions, basis which we are preparing a financial statements which would be in future, like there is a closure of business, or if there is a major acquisition, then that would be how will it affect our accounts in future? That would be a financial projection.
Very good. What is historical financial statement?
So historical financial statement is like when we have look at the financial statements for the past year, and then this is that we see if there is like I remember that example like that you gave, like if we have a 100 rupee sale and we were expecting it to be a 200 rupee sale, and then we have to check product wise and sale wise, customer wise, like what are the factors which are giving us, like what is the root cause due to which we are getting those less sales, and we need to deep dive into that particular area, and we need to make those adjustments particularly, so that we can, if we take into these adjustments, what our profits or what our sales would have been. That is what
Then what is perform of financial information?
सब कुछ मुझसे ही पूछ लिया सर आपने.
So your friends are not supporting you. That's not my fault. Call your friends. Mr. Kush Tiwari, Jaspreet Nafa. Where is your friends?
अब वही बताए.
Virtually अकेले फंस जाते हैं.
हाँ, एक बार आंसर देना शुरू करो.
साथ में हो तो एक दूसरे को हाथ मार दो.
क्या पूछा सर आपने? I'll try that as well.
Okay. What is performer financial statement then?
Yes, performer financial statement. Not
Do
able
you
to
guys
explain.
agree to what Ayush has shared as a historical financial statement?
Sir, he shared about the pro forma financial statement. So,
Okay.
historical financial statement will be last financial period audited or
Reviewed.
finalized financial statement.
Yes. Ayush, have you got it? What is
Yes,
historical financial statement? So what you are explaining is a
performer financial statements, right?
Okay. So what is attestation financial statement? No such word exists.
Okay.
Right. So you know what is important? Not just answering the right, but you know why it is right and why others are not. That's the more important things to be confident to sit in exam. Right. So maybe we can take a break, or this is a small topic, agreed upon procedure. Shall we finish this one-page topic really quick?
Yes, sir.
And then we can take a break and we'll start with new topic after that. So agreed upon procedure, it's like third leg of attestation engagement. In attestation engagement, what are the three category of engagement? Examination, review and
agreed upon procedure.
Agreed upon procedure. So far we have already discussed in detail examination engagement and review engagement. Let's finish off the agreed upon procedure as well. So in agreed upon procedure report, there also you require to mention in title independent CPA report. You'll be identifying the specific party, which is like management and those charged with governance or entity or shareholder, right? Subject matter and the assertion for which you are performing agreed upon procedure, like responsible party, like management or maybe your group reporting CPA firm, and subject matter and the responsibility of the responsible party for the subject matter. And then important thing here is procedure. Those who are agreed need to be mentioned in the agreed upon procedure report. Like these are the procedure we agreed for these financial statement line item or these financial statement assertion to be performed. Then need to be mentioned that we perform our agreed upon procedure in accordance with SSAE, right? And after that, a statement that the sufficiency of procedure is solely responsibility of the specified party. So I am not responsible for the sufficiency of the procedure. I am performing those procedures which has been mentioned to me in the engagement letter. Right? To ensure the sufficiency of the procedure is being responsibility of the party who is engaging you. Make sense? That's a major difference here. Yes, no?
Yes, sir.
Agree? A list of procedure performed and the related finding. So what all procedure you have performed and what all findings you have come across while performing those procedures, if there is any. It's not mandatory to mention all the time like finding. So if you have identified any finding, then only you'll be mentioning that finding, right? And wherever applicable, a description of any agreed upon materiality. So materiality for agreed upon procedure is also to be communicated under the instruction or engagement letter by the party who is engaging you, right? So you'll be mentioning the materiality as well. A statement that the practitioner was not engaged to and did not conducted an examination or review of the subject matter. So you need to clearly mention that you have performed agreed upon procedure, not the review and examination procedure. Next one is a statement of restriction on use. Generally agreed upon procedure are for the restricted use of the specified party who has involved you or who has engaged you to perform those agreed upon procedures. So you need to clearly mention a restriction statement for the use of the report because it is intended to be used solely for the specified party. Where applicable, reservation or restriction concerning the procedure or finding, and where applicable, a description of the nature of assistance provided by the specialist. So for example, you have got an agreed upon procedure to perform on, let's say, long-term employee benefits. So for that you have involved actuarial, right? So then you need to mention that you have taken an assistance of the actuarial while performing the agreed upon procedure on the long-term employee benefits. Then lastly, signature, city, state, and dates. Make sense? Any doubt here? Yes, no?
No.
All good? Signature, city, date. Okay, one question here really quick. Which condition should be met for an accountant to accept an engagement to apply agreed upon procedure to prospective financial statement? So what is the call of the question? What condition should be met by an accountant to accept an agreed upon procedure engagement? First one is accountant also examine the prospective financial statement. Is it required for an accountant to examine also?
No, sir.
Right?
Yes.
So first option is wrong.
No, sir.
Second is provision of the statement on standard for accounting and review services are followed. Do you follow SARS?
No,
Or agreed upon
SSAE.
procedure?
No, sir.
SSAEs,
SSAE.
attestation.
Right? So second statement is also wrong.
Yes.
Third one is distribution of the report is restricted to specified party. So do you mention restriction of report in the agreed upon procedure report? Yes, no? Do you restrict the use of AUP report or not?
This is the
Yes,
use
because
is restricted.
it is restricted because it is, sir, between the two groups. Like,
Yes,
Yeah,
sir.
two
as you said, an
parties.
example
We're
of
doing a particular agreed
audit
upon
team and
procedure.
component audit team. So it's between the two parties. So that's why it is, restricted to the specific users.
Last one is accountant take responsibility for the adequacy of procedure. Do CPA take the responsibility for adequacy of procedure?
No.
Right. So now look at point number H. Can anyone read this for me? Point number H. Huh? Ashish, can you read this?
Yes, sir. A statement that the sufficiency of the procedure is solely the responsibility of the specified parties and a disclaimer of responsibility for the sufficiency of other procedures.
So who is being responsible to ensure completeness of the procedure is the party who is engaging you. You are not responsible. Right? Make sense?
Yes, that makes sense.
And one more thing, point number I. Just read this also for me.
A statement of restriction on the use of the report because it is intended to be used solely by the specified parties.
Right. That is the reason a restriction need to be mentioned in your report. So that is the reason third point is correct. Make sense?
Yes, sir. Got
it. Ayush, Ashish.
Yes, sir.
Gurmehar, all set?
Yes, sir.
Okay, so we are done with 5.2.1 and 5.2.2. So we can take a break here.